The other stock that we have to discuss now is Castrol. Once again, a muted set of earnings in Q4 with low single-digit revenue growth. Omar Dorman, MD of Castrol India, is with us now. Omar, good morning. Your revenue went up only 3%. What's wrong here? Because a lot of investors are betting big on Castrol, but somehow it's not getting delivered in numbers, and you're seeing this low-digit revenue growth quarter after quarter.
Good morning. First of all, I'd like to say that we are really pleased to once again deliver a strong set of results despite some of the challenges that we faced in the quarter. And I'd like to take this opportunity to thank the entire Castrol India team, our suppliers and distributors for their support and hard work. So I would say that quarter one was a strong set of results, delivering 4% growth in an environment where we saw that there was a decline in the market. According to our estimate, there was a 5% decline in the market because of the impact of the demonetization. And you saw the GDP for the quarter one this morning. So quarter one suffered some of that impact, and we saw a 5% drop in the market, especially around the commercial vehicle engine oils that was under a lot of stress in the market. On top of that, we also saw a rising cost environment. Now, Castrol India led the price increases in the quarter. We were ahead of the market in terms of increasing our prices. So I'm really happy that despite all these challenges, we delivered growth versus last quarter. And if you look at the quarter one of 2016, that was really an exceptional quarter. And to be able to deliver growth versus quarter one of 2016, I think it's an exceptional result.
Okay. Mr. Dorman, good morning. I want to ask you about the way forward because we have GST coming on board from the 1st of July as well. And the rate for lubricants is now at 18% versus, the earlier tax of about 28 to 29%. So that's a big positive. How do you think this would translate in terms of higher volumes for a company like yours?
So, first of all, as you rightly said, for the majority of the lubricant products, the GST has been announced as 18%, which is I think it's a good move, and we believe that it will fuel larger demand in the marketplace. But our first priority is to ensure that we are ready and compliant and make sure that the transition to the GST environment is seamless and smooth for our company, and of course we will pass the tax benefit to our consumers, and hopefully that will be quite smooth. We're still trying to understand some of the mechanics, and we have time to do that, but we'll be ready for 1st of July. And long term, I think what I see 2016 and 2017, there's been some structural changes to the economy. So there will be some speed bumps in the short term, but I think long term we are really optimistic about the market and what we expect from the lubricant demand growth.
So if you think that the lower GST rates could boost volume growth, what do you think the volume growth could be for the calendar year 2017? Because you have done about 50 million litres in the first quarter. What is the expectation going ahead?
So it's difficult to anticipate. First of all, there are still very many unknowns and uncertainties around how the GST is going to be implemented and the readiness of the marketplace and how that will impact some of the economic drivers. So it's difficult to make a comment on 2017, but whatever the market growth is, we're going to be ahead of the market growth. That's our aim, and our strategy says that we'll grow ahead of the market in terms of power brands and personal mobility. Our strategy, again in quarter one, showed that our strategy is working well. We registered growth in terms of personal mobility, in terms of power brands, and that's going to be our intent. So that's our main focus. But it's very difficult to anticipate at this stage how the market will react to these structural changes, and that's why I said there will be some speed bumps in the short term, in the interim period. but the long term is really rosy.
Okay, one final question then. Have input costs peaked for now? Because we've seen global oil prices fall, we've seen the rupee appreciate. Do you think the worst of higher raw material costs is behind you?
Actually, on the contrary, we've seen about $150 to $200 increase in base oil cost year on year. And that's why we led the price increases in Q1. And the reason is as I mentioned a few times before, the crude has an impact on base oil, but actually base oil, it does have their own supply and demand. And there were some supply shortages, especially in the Asia and Pacific region in the first half, and that still continues. There's some volatility in the base oil prices. From Q4 of 2016 to Q1, we've seen about a $100 increase, and year on year is about almost $200 increase. Of course, the Forex helps, and that will continue helping. But we expect the crude to remain around 50 to 55. We don't expect high volatility. So hopefully the base oil will, with supply getting normalized and stabilized, we'll expect the prices to remain the same.
Okay, thanks a lot for joining us.